The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hey, good afternoon, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. Number to use to call if you want to talk to me about this market is 877-927-6648. 877-927-6648. My show airs every Tuesday and Thursday on TFNN from 3 to 4 Eastern. If you can't listen to the show live, you can always head over to iTunes, get the podcast over there. That's pretty easy to do. And you can also listen to all TFNN programming on your smartphone if you're not at your PC. Just plug those earbuds in, type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. Been having some issues with my charting service, but it appears to be back up and running now. So if you want to look at charts right along with me during the program, you can do that on Tiger TV, right on the homepage of TFNN.com. Channel 1, the show is carried live, and the show is archived on Channel 13. And with your smartphone, your Android device, your iPhone, you can also watch Tiger TV on via your cell phone as well, so check that out. Folks, don't forget my free webinar coming up Wednesday, May 2nd, next week, Wednesday, May 2nd, 6:30 p.m. Eastern Time. It's going to be about 45 minutes, short, sweet, to the point. We'll do a little Q&A afterwards, but it's going to be just a sort of a market analysis webinar. Introduce some of you to my Ultimate Growth Stocks newsletter, model portfolio, give you an idea of how I do things, how I buy stocks, how I sell stocks, what goes into the decision to add a stock to my model portfolio, what goes into the decision to sell, and how I go about analyzing overall market health to time my buy and sell decisions. I'll also talk about the fertile IPO market. A lot of interesting new issues out there, so towards the end of the webinar I'll talk about 3 recent new issues with the best potential. So I'm going to scan my screens and give you 3 that I think have great potential from here. All right, well, my friends over at Investors Business Daily called yesterday a follow-through day for the S&P 500. I've been getting a lot of questions about that today via email, and I remember in How to Make Money in Stocks, Bill O'Neill wrote that follow-through days shouldn't be begrudging. They should not be on the fence. They should be strong, convey strength. So I'm not sure that yesterday had that feel. Certainly we had a big move, almost a 50-point move in shares of Apple. There was a lot of good action in the market yesterday, no question about it. A lot of good movers. Boeing had outstanding earnings. That stock made a nice move. So strong action in the market yesterday, but the S&P 500 was only up 1.4%. Nasdaq Composite had a much bigger percentage gain, but the only index that followed through yesterday was the S&P 500. So, at this point, I'm not going to argue with that. Is it a questionable follow-through day? Probably, but you also have to keep in mind that stocks are acting pretty darn good. When you look through the growth screens, you look at the big leaders out there, they're acting perfectly fine. We're going to go over some of those today. What's even more compelling is that one day after the follow-through day, today being Thursday, we've got another decent session taking shape for the market, but there have been a multitude of heavy volume breakouts today. Some stocks making convincing moves in very heavy volume. Most of it earnings driven. But that's fine. Strong results, heavy volume breakouts. When you see a follow-through day, you do want to see an adequate supply of leadership, and it does appear to be out there. So, just because we saw a follow-through day yesterday in the S&P 500, it is not does not give you carte blanche to move everything in from the sidelines and become 100% invested. It does give you the green light to, try a couple stocks on for size. If they work, great. If they don't work, my strategy is to, I'll probably cut them loose. I'll probably limit losses, protect capital. I don't like to see a 5% loss turn into a 10% loss, turn into a 20, 30, 40% loss. So if the market tells me I'm wrong on a recent new buy, I tend to cut losses short, and sometimes I'll revisit the stock at a later date. So I picked up a couple of stocks today. My model portfolio currently has, I believe, 7 stocks in there now, and we'll see how it goes. I'm not going to say that we're going to start another 20% run higher here yesterday, but I do know that the S&P 500 followed through on the 11th day of its rally attempt yesterday, and that does give you a buy signal, not to be overly aggressive, but a signal just to dip your toes in the water again and see what's working out there. But a lot of good action in the market today. Let me go ahead and refresh my chart of the NASDAQ Composite, see where we're at here with about 45 minutes left to go in Thursday session. NASDAQ Composite right now up near its session high, up almost 23 points, 0.8% to 3,052. The NASDAQ Composite is keeping a slightly different timetable than the S&P 500. Yesterday, 1.4% gain for the S&P 500. That happened on the 11th day of its rally attempt that started on April 11th. The composite, you'll see here, is only 2 days into its rally attempt. The NASDAQ Composite cut through its 50-day moving average, had been hitting new lows, and so yesterday was the first day of a rally attempt. Today is day 2. Tomorrow will be day 3 on Friday. Monday will be day 4. So it's not out of the question that, if buyers slowly but surely start to come back into this market, the NASDAQ Composite could follow through as early as Monday next week. So just day 2 of a rally attempt for the NASDAQ Composite. Let's take a look at our friend, the S&P 500, which had a good day yesterday. You can see the first day of the rally attempt for the S&P 500 was all the way back over here, April 11th. And then you count 11 days up until Wednesday yesterday. That was the 1.4%. Some additional follow-through today. Volume on the New York Stock Exchange at this point tracking a little bit lighter than what we saw yesterday on the NYSE. Volume yesterday was right around average at 812 million shares, but it did come in higher than what we saw on Tuesday, so that was the second part of this follow-through day, being a follow-through day. You had a decent percentage gain. Volume of 812 million shares yesterday was slightly higher than what was seen on Tuesday. But again, today volume looks like it's going to come in a little bit below the 812 million shares seen yesterday. NASDAQ volume tracking pretty close, maybe even slightly higher. Yesterday we had 1.66 billion shares on the NASDAQ. That's also about average. Could come in slightly higher than that today. Let's see, the U.S. dollar. Last check, the U.S. dollar index was lower. I think the weak dollar is what caused that rally in gold today. But let's see, U.S. dollar index is 78.92, down about 14 ticks. Weak dollar, that resulted in a 1.1% move in gold bullion today to $1,660.50 an ounce. Let's check in on the GLD here, the Spider Gold Trust, probably the most popular ETF to play the price of gold. It is up $1.31 today, 0.8% to $160.93, working on a 3-session winning streak. I would suspect right now, I talk about these moving averages a lot. The 50-day moving average for the GLD, right around 163, could be a pretty stiff resistance level. So the GLD is still about just a little more than 2 points underneath that level. So that's the GLD. Oil up a little bit, not much, 0.4% to 104.55 a barrel. We had the We had the Fed statement yesterday, pretty much the same as what we heard in March. There's not going to be a meeting in May, but there is going to be one in June. But yesterday we really didn't hear anything different. Fed still has concerns about the economy. We're certainly not looking at a double-dip recession at this point. We are going to get a look at the first estimate to first quarter gross domestic product tomorrow. That could be a market mover. Right now, after 3% growth in the fourth quarter, the first estimate to Q1 growth should be in that 2.5% area. So again, it wasn't that long ago when we were talking about negative GDP growth or 0.5%, 1%, 1.5% growth. The economy seems to have moved on from that, and right now I think the Fed is looking at growth of 2 to 2.5% this year, slowly but surely picking up the pace into 2013, 2014, and beyond. So what we know right now is that QE3, quantitative easing, additional easing measures by the Fed are not warranted now. And I think the Fed realizes that. They also talked about inflation yesterday not being outside. Gas prices are high, oil prices are high, but that should be contained, and the Fed still does not see inflation being a big problem, and they plan on keeping that Fed funds rate low through late 2014. There's one dissenter on the Fed, Jeffrey Lacker, who believes, and I would have to tend to agree with him, that I think this economy is going to surprise to the upside, and Jeffrey Lacker is the only one that believes that as well at this point. Fed governor from Richmond, he thinks that the Fed funds rate is going to have to go up much sooner than 2014. So we'll see. Earlier today, weekly jobless claims down 1,000 to 388,000. That's slightly lower from an upwardly revised 389,000 the prior week. Stocks also got a lift today. Pending home sales data pretty good. Contract signings to sell existing homes reached a 23-month high in March. National Association of Realtors pending home sales index rose to 101.4. February's reading was upwardly revised to 97.4 from an initial reading of 96.5. So March pending sales are up 12.8% from a year ago. So pretty decent numbers there. Let's check in on the iShares Dow Jones U.S. Home Construction Index Fund. So here we go. My charts doesn't look like they're working. Bear with me here. Okay. Well, that looks pretty good. All right, let's take a look at D.R. Horton. D.R. Horton is a top-rated stock in the Dow Jones, the iShares Dow Jones U.S. Home Construction Index Fund. I was going to say the ITB technically still looks pretty good here. We could see more strength in the home building sector. D.R. Horton is a top-rated stock in the ITB. Right now, it is outperforming nicely today, up 3.25% to $16.22, but you can see a nice little consolidation forming here. This stock could be poised to take out its recent high of 16.5 thereabouts. And let's also check in on Lennar, which is the second highest rating holding in the ITB. Shares of Lennar also up big today, up 5.5% to 27.32. So two high-quality home builders there, D.R. Horton and Lennar, doing well thanks to pretty good pending home sales data earlier today. All right, folks, coming up on our first break, you're listening to Breakout Investing on TFNN. We'll be right back.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. I mentioned at the top of the show that when you do see a sign of strength in the major averages, like we did yesterday, specifically in the S&P 500, you want to see plenty of stocks out there flexing their muscle. Saw some of it yesterday, but today in particular, just going to take a look at a couple of names here. And again, I've been having some issues with my charts here, so hopefully it'll be working okay. Here's a look at Solar Winds. You can see a monster move by Solar Winds today, up $7.43, close to 20% on the day to $45.25. But you can see a big, solid, heavy volume breakout here for Solar Winds. This is a stock that has a market cap of a little over $3 billion, so it puts it just above that small cap into mid cap territory. Solar Winds basically makes software that helps information technology departments manage data storage systems and communication networks, things like that. Earnings were up 43% from a year ago to 30 cents a share. Sales up 39% to $59.7 million. This is not a big company, but I still think it's a company that is well positioned for growth, and even more importantly, it's a newer company, so it's arguably still in the early stages of a meaningful price gain here. That is a look at the daily chart for Solar Winds. Let's take a look at the weekly chart as well, give us some slightly different perspective, and we'll see you could either call SolarWinds a base breakout here. You can see this blue line. I just highlighted a consolidation area that it's breaking out from, or you could just call it just a nice bounce off of the 10-week moving average after a breakout earlier this year. But SolarWinds to me looks like it has the look of an emerging leader here. And again, when you get follow through in the market, you want to just kind of nibble at some of these names and see if they work. If it's a healthy market, if the market truly is ready to move higher, you'd expect a lot of these breakouts today to be able to hold their gains successfully. They're not going to go straight up day after day after day after day, but just watch the action of breakouts today and see how they work. So SolarWinds having a great day. I was listening to Tom and Steve earlier. They were talking about Citrix Systems, another monster mover here today. Big gap up in price. This one's up close to 14% to $87.80. Citrix is an enterprise software maker, another cloud computing play, red hot area of tech right now. Earnings growth not huge, only up 18% from a year ago, but the results did beat views by 8 cents. Revenue up 20% to $589 million. This is a highly respected company in the cloud space, and the results, both bottom line and top line growth, easily exceeded expectations. Citrix did $589 million in revenue. The estimate was for 562. So they beat the revenue estimate by looks like 27 million or so. So great numbers from Citrix. Let's look at the weekly chart for Citrix, and we'll see just another powerful base breakout here. Citrix, you can see a big base that started all the way back in last year, basically. Last year, big, long base here, clears a swing point today of $80.70. So big move for Citrix today. I mentioned strong earnings from Boeing yesterday. Obviously, Boeing is a large cap stock. I think it has a market cap north of 50 billion, if memory serves. Let me just double check here. Yeah, market cap of 57.5 billion. But Boeing is another interesting name here. Large cap stock. See a big breakout yesterday, and look what it's doing. Just trading tightly, holding on to all of its gains yesterday. Stock is unchanged today at 77.08, but again made a monster move yesterday, and a lot of good things going on at Boeing. First of all, market cap of 57.5 billion. This is a company that posted sales growth yesterday in the first quarter of 30% year-over-year growth. They did a little over 19 billion in sales. Strong commercial jet orders, 737s, 777s doing well. But the real story with Boeing, obviously, is its 787 Dreamliner. And that should be a growth driver going forward. So this is the daily chart of Boeing, and let's look at the weekly chart for Boeing. And we'll see how this is an interesting stock setting up here. You can see a big long base forming for Boeing here. Swing point of 76.74. It's really trying to break out with conviction over 77. Again, if this market rally works, this is another stock you want to keep your eye on. It still could be in the early stages of a move here. Shares of Boeing doing well today. All right, folks, stick with us. Coming back with another segment in about 3 to 4 minutes. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. 25 minutes left to go in Thursday's session. Index is hanging in there just fine. The Dow up 123 points, call it 0.9% to 13,213. NASDAQ Composite up close to 24 points to 3,053, and the S&P 500 sitting right at that 1,400 level, up about 0.7%. Volume on the New York Stock Exchange tracking a little bit lower than what we saw Wednesday. NASDAQ volume tracking a little bit higher. All right, I want to go to Bill, Houston, Texas, wants to talk about the S&P 500, particularly the SPYs, it looks like. Bill, how are you doing today?
Doing fine. Just wondering if there may be an entry point in the SPYs here at these lofty levels.
You know what? It's so the SPY is working on a 3-session winning streak. It's up 3 days in a row. If you listen to me at the top of the show, Bill, we did see pretty compelling action in the S&P 500 yesterday. 11 days into its rally attempt, it did pop 1.4%. It's kind of ironic because I think its price action was more significant than the NASDAQ Composite, which outperformed. And again, it's because I think the S&P 500 confirmed a new rally attempt yesterday. So I think you could get into the SPY right here. I'll tell you what I would not want to see in the market either tomorrow or Monday is I do not want to see a meaningful decline in the indexes where volume picks up from the prior session. That would sort of cast some doubt on the follow-through day that we saw yesterday for the S&P 500. But I think you could nibble here based on the sign of strength that we saw in the S&P 500 yesterday. I'd look at recent lows in the SPY right around 135, 136, possibly as a stop area.
Good. That's exactly what I was thinking. Just nibble here and put in a stop at about 135. Thanks a million, Ken.
Okay, you got it, Bill. Thanks for the call. Appreciate it. All right, Bill from Houston, Texas, asking about the SPY. Yeah, I mean it's listen. The bulls can make a decent case here. The bears, as always, can make a pretty good case as well. We're heading into a seasonally tough time for the market. May is approaching quickly, but you know what? If you get a sign of strength, you get a sign of strength, and you have to see where it takes us. It could spawn a tradable rally, or it could spawn something bigger, or if we see selling come into the market tomorrow, for example, maybe it's a disappointing first quarter GDP reading, that would cast some doubt on the follow-through day that we saw Wednesday. But nothing wrong with nibbling here at long positions. Again, I did it with a couple of names for my Ultimate Growth Stocks model portfolio here. But, again, I follow a portfolio strategy where it's, I'm not going to bat 100% buying growth stocks. And, if I bat 60 to 70%, 600, 700, I'm doing pretty darn good. And in the instances where I'm wrong or the market tells me I'm wrong, I get out with a small loss because I know that small losses can always be overcome. Even if you take, 2 or 3 in a row, you hit a cold spell. You keep losses small, you always live to see another day, and you can continue to invest in stocks. What investors lose faith in the market when they take a big loss in a stock. They let a 5-10% loss spiral out of control, and then they're holding that stock for years, waiting to get back to even. So all right. So going into the last break, we talked about solar winds, Citrix Systems, Boeing, some big movers recently. Another name I'm watching here for a possible breakout. I like the stock. I don't love it, but this is an interesting name here because it is basing nicely and could be on the verge of a technical breakout. Take a look at CF Industries here. Stock is up 88 cents today, about 0.5% to $193.12. $193.12, latest price for CF Industries. Of course, this is a fertilizer play. They make nitrogen and phosphate fertilizers. Earnings are due May 3rd after the close. Earnings should be up about 27% from a year ago. Sales only up 7% to $1.26 billion. But it is an interesting technical setup here. Here's the daily chart here. Nice long consolidation. Let's move over, take a look at the weekly chart for CF Industries, and we'll see the swing point here of 195.48. So, rather than buy this in anticipation of a breakout, because volume is not heavy in the stock yet, you want to see when a stock, breaks out over a swing point, you want to see conviction behind the buying. You want to see a big wave of volume come in. You want to see signs that big investors are in there buying. Volume is still light in CF Industries, so I'd rather wait for this stock to prove itself a little bit more. It's only about a little more than 2 points from a swing point, but you could see some volume come into this name soon, especially if this market rally keeps going. You want to pay attention to breakouts from consolidations. CF Industries, one could be taking shape here as well. Let's move on and take a look at CRUS, Cirrus Logic. This is a chip designer. They don't make their own chips. They're fabless, so they ship that process out. But Cirrus designs chips that are in Apple's iPhone. So big move for Cirrus Logic today. Stock up 18% to $27.32. And a lot of people are going to scoff at when a stock rises 10, 15, 20% in one day. But boy, is there a lot of buying in this stock today. It's trading near its session high. Buying demand very, very strong in Cirrus. Again, Apple's iPhone uses Cirrus chips. I think I read that in the latest reported quarter, about 60% of Cirrus's business came from Apple. So there's a little risk there. I mean, it's tough to bet against Apple at this point, but Cirrus is certainly very reliant on Apple for business. But the numbers were pretty good here. Earnings up 64% from a year ago. Sales up 21% to $110.6 million. Swing over, take a look at the weekly chart for Cirrus Logic, and what do you know? Another good base breakout here. Come on, here it is. Keep working for me here. All right, here's a weekly chart for Cirrus Logic, and remember we're talking about base breakouts. Here's a big long consolidation. A little bit of a handle area here, and then a strong breakout for Cirrus today. So, a lot of good action in the market. When you're not seeing technical breakouts from bases, you're seeing plenty of instances of support at the 10-week moving average, which is also compelling because sometimes when a stock breaks out of a base, it will pay a visit down to support for the first time, and just off and on problems with my charting service here, so we'll see. It doesn't look like it's working now, but I was going to take a look at Equinix. This is a company, I mean, just a huge market leader. Equinix is a data center operator. The stock was up huge today. Earnings up 34%, sales up 25% to $452.2 million, but Equinix, a good example of support at the 10-week moving average. So let me just try to pull this up again so we can take a look at Equinix. All right, let's see here. EQIX. It's not going to cooperate. So it goes. But good move for Equinix and support at the 10-week moving average. Stock was up really, really big today. Can't get a quote on it right now, but big day for Equinix. Also Apple. Remember I was talking about Apple, and definitely the stock looked vulnerable. It was under a lot of heavy volume selling. And then the company reported just a blowout quarter. Stock was up almost 50 points yesterday, something like 8-9%, something like that. And what you have with Apple now is really just a test of the 10-week moving average. So it came down to support, and it bounced off the line. So Apple continues to act pretty well here. Certainly has not broken down yet. So a lot of instances of support at the 10-week moving average, which is compelling. All right, here's a look at Equinix. We'll see the stock right now is up close to 14% today to $170.23. And let's take a look at the weekly chart for Equinix. EQIX. And here it is. Okay, so there's a good visual. Just a weekly chart of Equinix and just a good bounce off the 10-week moving average, good bounce off support. So solid day there. And while we're at it, let's take a look at shares of Apple. Now that the charts are back up and running here, shares of Apple down $3.11 today, 0.5% to 606.89. It is trading a little bit below its intraday low put in yesterday, but let's take a look at the weekly chart for Apple, and we'll see it's a stock that has clearly has not yet broken down by any means. In fact, you can see it is trading up near its high for the week. It hit a high this week of $618. Right now trading close to about $607 a share, but trying to firm up at its 10-week moving average. So take a look at a financial here, TCBI. This is not the country's best yogurt. It's TCBI, Texas Capital Bank Shares. Nice breakout for this name today. Small cap bank down in Texas. Stock is up close to 7% today to $37.13. This stock has been appearing in my growth screens for quite a while. Only a $1.4 billion market cap. Earnings up 126% from a year ago. That was actually the fourth straight quarter of triple-digit earnings growth for Texas Capital Bank Shares. Sales up 32% to just over $100 million. We'll switch over and take a look at a weekly chart for Texas Capital. This is another unequivocal, solid performer today. Good breakout in heavy volume. So you're seeing no shortage of heavy volume breakouts. That's for sure. And finally, let's take a look at shares of SourceFire. SourceFire has not reported earnings yet, but this is another could be an emerging leader here. A name you want to watch. Ticker FIRE. Small cap with a market cap of $1.5 billion. Earnings are going to be coming out April 30th after the close. The company makes network security products. Earnings are expected to be up about 100% to 8 cents a share. Sales up 35% to $41.6 million. So stock that came down to its 50-day moving average recently. This is the daily chart. Looks like it wants to find support there, so another strong performer. Lots of earnings reports. Obviously, we've been talking about a few of them, but let's check in on Las Vegas Sands. The numbers were pretty good at LVS, but at last check, the stock was getting hit pretty good. See if we'll be able to pull up LVS here. Making some progress. LVS is still doing well, obviously, in Macau. Good demand from Singapore as well. But the stock is under some pressure here. We've seen a lot of great movers today. LVS, to me, looks like it's ready to base for a little while. Looks like it's going to base for a few weeks. We'll see if it can get going at a later time. But it's underperforming today pretty good, down about 3.4% to $56.80. Trying to firm up at its 50-day moving average. Had a nice bounce off the line yesterday. It is trading right at that support level now on an up day for the market. You'd expect a name like this to outperform, but earnings kind of the weighing down the stock here. The growth was great. 89% earnings growth. Sales growth 31% from a year ago to $2.76 billion. Again, Macau and Singapore doing well, but still a company that has major expansion plans around the world. Las Vegas Sands, really the story isn't Las Vegas anymore. It's Asian markets and elsewhere. All right, let's check in on Watson Pharmaceuticals as well. WPI, big move. It's just amazing the number of stocks that are just gapping up and the volume behind the gap up. Under some serious accumulation here. Watson Pharmaceuticals, outstanding company here, very profitable, up 7.4% today to $74.85. Story here is not earnings, but late Wednesday, Watson said it was buying generic drug maker Actavis for $5.6 billion. Watson has, again, been a very strong performer since it started selling a generic version of cholesterol drug Lipitor in December. So Watson Pharmaceuticals doing very well, and let's check in on a weekly chart for Watson as well, give us a different perspective here. And you can see I drew a little sort of a trend line here. Watson, again, in the early stages of potentially breaking out of a big, long base here. So this is another compelling stock. You get follow through in the S&P 500 yesterday. Keeping track of these stocks that are breaking out of consolidation areas in heavy volume. That's what it's all about, and frankly, it's how I learned how to invest during the 12, 13 years I spent at Investors Business Daily. Coming up after the close today, we've got a lot of earnings reports, so we'll talk about some of those when we come back. Don't forget economic data tomorrow. We've got the first reading to first quarter gross domestic product, also a final reading on consumer confidence from the University of Michigan. That comes on Friday. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted that was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. As we head into the close here, put the finishing touches on Thursday's session. Let's go to Rick, I believe, from British Columbia, wants to talk IWM, the Russell 2000 ETF. How you doing?
Yeah, not too bad. How you doing? Hey, I got a question here. Like,
yes,
breakouts are great, don't get me wrong. I don't normally myself buy breakouts, but I respect your analysis on it. But my question to you is, like, you take a look at the volume on especially the SPYs today, unless it really comes in, and even the IWM. I mean, we're going up on fumes here. We'll probably get some short covering late in the day. And if I were to go long here, I don't think I'd be sleeping too good tonight. If I look at the volumes, you know what I'm saying?
Oh no! Believe me, I look at volume just as closely as Tom does, and I use fundamental and technical analysis, so volume is very important. When you look at the IWM, there's no doubt volume during its recent slide was quite heavy. It was up 1.7% yesterday. This was another index that flashed a follow through day. The percentage gain was strong. Volume was on the light side, but it did come in higher from the prior session, so that's all that you really need for a follow-through day. But I can understand understand the bear case. I mean, it's volume today looks like it's probably going to come in lighter, at least in the IWM than yesterday, and that's why you're not making any big bets here. Do I think there's a chance the trend has turned upward? Absolutely. I can't say with 100% conviction though, and that's why I'm not moving all in, just kind of nibbling and seeing what works.
Okay, man.
All right, thanks, Rick.
Yeah, you bet. Bye.
Bye. Yeah, I mean, it's a valid point by Rick, and it's something, when I call into Tom's show, we talk about stocks coming down in heavy volume. I mean, we just take a look at shares of Apple as well. I mean, I talked about the fact that it is firming up in its 10-week moving average, but, you look at the volume that was in Apple behind its recent decline. I mean, massive distribution. And then the stock is up close to 50 points yesterday. Look at that volume bar. Look at the volume bar yesterday. I was actually surprised at how light volume was in Apple yesterday. It was above average, but well below the levels that it came down in the prior 2 weeks. So price and volume in Apple definitely suspect, but there was a bullish gap up for the stock yesterday, and again, follow through in the S&P 500 yesterday. Small cap indexes acted well. We'll see where it takes us. I'm not in a position to say it's going to launch a 20% gain. It may be a 5% gain. I'm just going to watch the market on a daily basis and listen to the message. Listen to the message that it's telling me on a daily basis. But right now, pretty decent performance for the major averages after a strong performance yesterday. The Dow right now up looks like about 117 points. 117 points for the Dow to 13,207. NASDAQ up close to 20 points to 3,049, and the S&P 500 right around that 1,400 level, up about 9 points or so. All my computer connections for some reason are super slow today, so I apologize about that. I'm not sure those are the most recent numbers for the indexes, but close enough. All right. Hey, let's also take a look at LinkedIn, LNKD. I recently took profits in LinkedIn. I was a little unsure about the market, so I took some profits in LinkedIn, took some money off the table. But this is still a stock that is setting up pretty nicely. It's outperforming today, up 2.3% to 105.17. Wouldn't be surprised to see this one try to take out that 107, 108 price level. All right, folks, after the close, earnings from Amazon, Coinstar, Fusion.io coming up next. The Tom O'Brien Show on TFNN. We'll talk to you soon.
Great Basin Gold is a mining company engaged in the exploration and development of two emerging gold properties in Nevada and South Africa.